So these disparate economic outcomes across racial and other lines are a long-standing feature of our economy. They've been with us for a very long time. And there is a great risk that the pandemic is making them worse because the people who were most affected by the job losses were people in relatively low-paying parts of the service industry. That happens to skew more to minorities and to women. And so there's a real concern that if we don't act as quickly as possible to support those people, get them back to work, get the economy up and running as much as possible, that we'll leave behind a more unequal situation, which is tragic because we actually had been making good progress on these issues for the last few years. As the very long expansion, longest in our recorded history, went on, we started to see the gains go more to people at the lower end of the income spectrum. We saw racial income gaps declining, racial gaps in labor force participation and unemployment declining. We saw some very constructive things, but waiting for the 8th or 9th year of an expansion is not a perfect strategy. So I think there is an issue of wanting to do as much as we can to avoid exacerbating these long-standing differences and get back to a strong economy where we can start making progress again, which is what we were doing just back in February.
Right. Well, and, you know, as the Fed chair and as the Fed, you have the dual mission of low unemployment and, managing inflation, hitting inflation target rates. What if the Fed, in this need to spur job growth, and we see that there hasn't been a big worry about inflation in the long term, what if the Fed were to lower its target for employment, lower to 3 or even under 3%? What impact might that have on addressing long-term needs for addressing inequality?
So actually, we've made a change in our operating framework, which I think addresses that directly. And that is, while we're going to have an estimate of the natural rate of unemployment, we're not going to act on that, even if unemployment goes below that, unless we see inflation or some other problematic thing that seems to be linked to where our rates are. So we're not going to preemptively raise rates until we see actual inflation now as a consequence of low unemployment. And I think that's a lesson that we learned during the last expansion when we saw very low, 50-year lows in unemployment with really no and very high participation, really a strong labor market as we've seen in my lifetime, without inflation acting in a way that was concerning.
Thank you, Chair Powell. Thank you, Mr. Chair. And I also want to extend my thanks to Secretary Mnuchin for his service. Thanks very much, everyone.
Thank you.
Senator Kramer.
Thank you, Mr. Chairman, and thank you to the two witnesses, of course, for being here. And let me just also say congratulations to Chairman Crapo on a wonderful 2 years as chairman, and you've been great to me and to the whole committee, and really appreciate your approach. And also, thank you to Senator McSally, Senator Jones. We will miss you both, and we're very grateful for your service. Now, it shouldn't surprise anybody that the issue on my mind, the one that I pretty much wake up thinking about every day, I'm wondering how we're ever going to tackle it, of course, is with the CARES Act, is PPP Forgiveness. And Secretary Mnuchin, I just want to address a couple of things directly to you. You know, of course, that Senator Menendez and I, along with Senator Tillis and Senator Sinema, and about 28 of our closest friends and allies from both political parties have introduced the forgiveness bill, Senate 4117, takes all the loans at $150,000 less, one-page attestation, and those would be forgiven. Those $150,000 and less loans make up, like I said, 85% of the total loans, but only 26% of the dollar amount. And both of you, now both the Chairman Powell and Secretary Mnuchin have said during this hearing that what businesses need are not loans, but they need grants. Well, forgiveness was a major component of our bill. And once again, in my view, Congress did what it often does, and it doesn't prescribe enough of a solution that allows the bureaucracy, which I fear more than the devil himself, frankly, to come up with their own rules and regulations that are always aimed at CYA, no understanding of how a business operates or how it keeps employees. But when we passed PPP, as you'll recall, it was designed to largely be forgiven. It was designed to keep people on a payroll so they avoided the unemployment rolls. We encouraged, almost forced, small lenders and small borrowers to use the program. I've talked to literally hundreds, multiple times, hundreds of community banks, consumer banks, large banks, credit unions, even farm credit services about PPP and why it needs to be utilized. And yet, here we are still waiting for another package. It is my hope, desire, conviction to work my tail off to prescribe a solution to this. But in the meantime, Mr. Secretary, I've been very disappointed in SBA's response. They seem to use, like the bureaucracy always does, use their discretion to the advantage of the government, not to the advantage of the small business. Let me give you just some specific examples that I've heard from my constituents. And I'm going to give you one borrower example, small business, pretty typical, I think. Here's what they wrote to me. Senator Kramer, please help. That's the opening line. With Congress not passing a new stimulus, it leaves many small businesses in a bind. The problem is, as we go to our bank and ask for an operating loan, they tell us not until you get your PPP forgiveness. Now, why haven't they gotten it? You know, we've been pretty instructive on this. The bank says until we receive notice from SBA that our original PPP loan has been forgiven, they aren't going to give us the money. Here's how slowly they're working on this particular loan. This is a loan of just right at about $100,000. They have moved so slow that they needed some pressure from us. So we applied that pressure, and here's what it took. It took 9 weeks, Mr. Secretary, to forgive a $100,000 loan where the program was designed for it to be forgiven. This is a small hotel operation in Bismarck. 9 weeks, and guess what? It took really 9 weeks and 1 day, because the day that we made the call to inquire at SBA, they finally forgave the loan. Now, this is just one example out of hundreds, maybe even thousands of them. Here's one from a lender, before I let you answer. Here's a lender that says, just reaching out as FYI, SBA has requested additional documentation on 5% of the loans, ranging from $3,700 to $134,000, and an average of $33,000 per loan. It's a waste of time. So the bureaucracy, again, always does what the bureaucracy is going to do. Mr. Secretary, this is very disappointing. This is very disappointing to people who didn't even want to take loans. They could have laid all of these people off. They could have gotten that very generous unemployment extension program, but they trusted us. And SBA did what we just know the bureaucracy is always going to do. They've extended the time. They've asked for more documentation. They've put more demands on them. The cost to comply is now $2,000 per borrower, and it amounts to billions of dollars. Obviously, my time is up. I'd love to hear more from you. I've got lots more to say about it, but we've got to do better than this, Mr. Secretary.
Thank you. I agree with you. We need to do better, and we support legislation to help forgiveness.
But in the meantime, use your discretion. Please use the flexibility that the agency has, and tell the bureaucracy to stop being such a bureaucracy. There's a big disconnect between the bureaucrat and the business, and the billionaires in the business. We need small businesses to thrive.
Thank you, Senator Cortez Masto.
Thank you. Gentlemen, thank you. It's great to see you again. So appreciate you being here. Let me jump right into it. As you know, I talk to you about this all the time. I come from Nevada. The hospitality and leisure industry has been so hard hit. Nevada's unemployment rate now is more than 12%. We know that more than 175,000 people continue to claim unemployment insurance. Just the statistics from the American Hotel and Lodging Association that nearly 70% of hotels may close by the end of this year if they do not receive additional government funding. And I will tell you, in Las Vegas and Reno, employment in our hospitality and leisure sector is down nearly 25% and 14% respectively. So let me start there with both of you. Secretary Mnuchin, what is the administration or what are you advocating moving forward that we should do to address the impact that we are seeing on our leisure and hospitality industry?
Well, specifically, and I agree with you, that this industry has been devastated. I believe that the PPP could immediately help people. I think that the airlines have also been devastated, so we support additional relief for the airlines, but hotels, small businesses, entertainment, all of these companies could access the PPP.
Well, let me jump back there, because when I talk about hospitality and leisure, I'm talking about restaurants, I'm talking about live events. And if they're accessing the PPP, they're not looking for loans. And I think you said it earlier. It's not the loans that help.
We have been listening to the Fed Chair Jay Powell and Treasury Secretary Steven Mnuchin testifying today in front of the Senate Banking Committee as they just wind down their testimony on the CARES Act, and particularly what the economy needs right now, what its current situation is, and whether there needs to be further stimulus. Also, a fair amount about the decision to require the Fed to give back some $500 billion that they had for possible loans to certain individuals. We want to bring in now our chief international policy correspondent. He is Michael McKee. Michael, what did we learn? What did you learn? Because you know a lot of this stuff already.
I don't think we learned a whole lot new, David. The questioning broke down pretty much on partisan lines, with Democrats suggesting that the Treasury Secretary was wrong to cancel the Fed lending programs, and the Republicans saying that was the intent of Congress and that's a good idea. And then both sides agreeing that we need more fiscal stimulus, but not agreeing on what kind or how much. This new fiscal stimulus program announced today by a bipartisan group of senators worked its way into the hearing, and many of the questions were framed around whether you should do this or that. Jay Powell ducked most of those, saying the decisions on how to stimulate the economy are up to members of Congress, but he agreed we do need some stimulus. We need something that would be a bridge to get us to the point where the economy can start growing again, because we've got vaccines out there. And he said there are certain states and there are certain sectors that have been hit really hard, including leisure and hospitality. States like California and Florida, where tourism have been hard. And you just heard Senator Cortez Masto talking about the impact in Nevada. So there's a lot of agreement that something needs to be done, but this didn't move us any closer to deciding what or how much or when.
Yeah, I think a lot of people thought something needed to be done even before this hearing. Thank you so much to Bloomberg's Michael McKee. We've heard today from Fed Chair Jay Powell about his concerns about the U.S. economy, even as President-elect Biden is about to make the formal announcement of his own economic team. Roger Altman went from Wall Street to Washington as the Deputy Treasury Secretary under President Clinton, and then returned to found Evercore, where he is Senior Executive Chairman. And welcome him now back to Bloomberg. So, Roger, thank you so much for being with us. It does certainly, there's quite a juxtaposition here. On the one hand, of where is the economy, how much more do we need to keep us going, on the one hand, as we're trying to put a new economic team together. What is your assessment of how bad the economy is right now?
Well, we have an unusual split screen character to the economy today, in the sense that the period between now and full distribution of the vaccine is a period of acute need. And post-vaccine, and I do mean post-universal distribution of the vaccine and post-vaccination of a high percentage of Americans, we should see strong growth. Now, it's interesting that this is very different than the conditions that Mr. Biden found upon becoming vice president in 2009. It's a really interesting contrast. At that time, the stock market was falling, unemployment was rising, the economy was weakening, and the worst was yet to come. Today, it's quite different. Unemployment is falling, the economy is moving into recovery mode, albeit fitfully. The market is rising, and the outlook is better. And so here we have a more temporary but acute need than we had at the beginning, for example, of 2009. What's needed now is the following. A stimulus bill, an additional version of the CARES Act, which includes funds for stopping COVID, masking, distancing, vaccine distribution, tracing, and so forth. Additions to the to unemployment insurance, where the pandemic premium, as people call it, expired a while ago. Assistance, temporary assistance to states, further assistance, and perhaps further assistance to small business. Those are the four things I would think should be part of a stimulus bill that should have been passed before the election, ideally would be passed in the lame duck session of Congress, but at worst needs to be passed immediately upon the new president's inauguration.
So Roger, we're
Now-
all mindful of the fact that there are a lot of people hurting out there, and we don't want to ignore the fact that every day some people are really having a tough time of it. At the same time, is it a matter of timing? Because you talk about we're going to have, it looks like, we're going to have a universal vaccine sometime next year. But, or is there permanent damage that could be done in the meantime? We have Lael Brainerd, a member of the Federal Reserve, saying if we don't get fiscal stimulus, there could be what she called permanent scarring. What is that risk?
Well, when Biden takes office as president, there will be about 10 million Americans unemployed, about 2/3 of whom will have become unemployed by virtue of the eruption of COVID and the economic plunge that resulted from it. And that is a really serious problem. And I believe, I didn't see her remarks, but I believe what she's referring to is the need for targeted assistance, which I would define as an increase temporarily in the amount of unemployment insurance available to the unemployed, and perhaps the reimposition of a direct payment to low-income households. We saw $1,200 a household in early to mid 2020. I think we probably could use that again temporarily, but I think she's referring to the need for that targeted assistance over the next few months to avoid a lot of those people dropping out of the workforce permanently.
Roger, we have the immediate problem, as you describe it, over the next few months or so. Take a step back in the longer scenario, though. As I say, we have President-elect Biden announcing his economic team. How much is it realistic to expect a new economic team can redirect the economy fundamentally? You've been in those rooms in Washington. How much can the administration do in the longer term?
Some of the answer to that, David, depends on what can be legislated and what can't be. And we're all familiar with the very thin majority that the president-elect's party, the Democrats, are going to have in the House. It looks like it could be as little as 6 or 7 or 8 votes majority. Some races still uncalled. And the uncertain makeup of the Senate. Either McConnell will remain majority leader because the Republicans hold a majority through the outcome of the Georgia Senate runoffs, or if the Democrats win them both, then Schumer becomes majority leader. But either way, it's hard to govern when you have the opposing party in a majority in the Senate, or just a 50-50 split in the Senate. Very hard to govern. So if the President-elect Biden coming up into office had more running room from a legislative point of view, the answer to your question is you can do quite a lot. But it's going to be challenging. But to give you an example of one thing that could be done if there can be some bipartisanship, both parties agree on infrastructure. Both parties agree we need a major federal initiative. We haven't had one in a long time on roads, bridges, tunnels, airports, and the like. And one would hope that whether McConnell is majority leader or Schumer is majority leader, that we could see an agreement on an infrastructure initiative. But when it comes to matters like President-elect Biden's care workers agenda, which I find very impressive, or in a different vein, his climate agenda, it's going to be hard to legislate those given the likely makeup of the new Congress.
What about one specific aspect of the economy that President-elect Biden has been very spoken about, and that is the aim to reintroduce some racial and economic justice. That is to say, address some of the economic inequalities in the country. Something, in fact, we heard from Chair Powell about specifically, that it's not just a matter of doing the moral thing, but also it would be better for growth. Are there things that a Biden administration can do, even if they don't have control of the Senate, in that area?
That's a hard question to answer. because it depends on what you think you can achieve by executive action as compared to what you need to do through legislation. I think the right answer to your question is both partly economic and partly various levels of criminal justice reform. Now, when it comes to the economic side, I said a moment ago that we probably could use a reinstitution of the $1,200 per family payment monthly to particularly low-income households. Because one reality of this 2020 recession has been the degree to which it has deepened, badly deepened, the inequality divide in this country, which was already way too big. And Blacks and Hispanic Americans are particularly victimized by this recession. So if there could be agreement on the right type of stimulus, additional stimulus, that would respond to the question you're asking in part. Some of the criminal justice reform issues are state and local issues, not federal ones. And so, although there can be a federal role, but there's also an important state and local role. So it's hard to tell precisely what can be done, because it's hard to tell what there can be bipartisanship on. Can some of this be done on a bipartisan basis? After all, President Trump did succeed in passing the First Step Act, which was an important criminal justice reform legislation. And maybe this too can be the object of further bipartisanship, but it's hard to know that right now.
Roger, let's turn, if we can, from your role as economic statesman to your role as head and founder of Evercore for a moment. Give us a sense of how the C-suite is reacting right now to the Biden transition. What is the sentiment in the C-suite? Are they in a panic about possible taxes and need to get deals done? Are they looking forward to more stability? What's their attitude right now?
Well, let's just step back a moment to a month ago today. A month ago today, we were within a day or two of the election. And today, a month later, the reaction of at least the large scale business community in this country is one of giant relief. There's no doubt about that. The business community is looking forward to a period of greater predictability, stability, more thoughtful approach to governing, and the like. So the answer is lots and lots of relief. You have different views in the business community as to whether they think divided government with the Senate in Republican hands and the White House in Democratic hands is a good thing or a bad thing. Some think it's good because it imposes limits on what can be done, and some think it's bad because it means gridlock. But generally speaking, the business community is very much welcoming this new administration. No doubt about it.
Roger, are you seeing, or might you anticipate the possibility that at least for some CEOs, their eyes might turn overseas more than they did under the Trump administration? Because there was a lot of trade strife. We know there were a lot of issues, a lot of sanctions, things like that. It appears that may ameliorate somewhat. And also we see actually right now, we're seeing the stock markets, for example, overseas really come back strong. Does it open up more international deals?
At the margin, yes. But David, keep in mind that if you are a multinational with, say, for example, half your revenues outside the U.S., you don't have the alternative of paying less attention to your non-U.S. business. You have to. And you have to do that whether Donald Trump is president or Joe Biden is president, whatever is going on in the Congress and so forth. At the margin, yes, I think, again, the business community will welcome a greater degree of predictability and stability and a less tariff-centered international economic policy. They're going to welcome that because the tariff-centered approach that President Trump used did not work very well. Just look at the way China managed to succeed despite it. And so I think the answer to your question at the margin is yes.
We talked earlier about what looks to be good news on the horizon sometime next year with a widely distributed vaccine. Is the business community, and particularly the leadership of the business community, are they anticipating a possible, let me call it snapback, that in fact things might get better really fast after that happens?
Well, it depends a bit on the business you're in, of course, but I think the answer, generally speaking, is yes. I mean, we could see an extremely strong second half of 2021, and I think the stock market is anticipating some of that with this recent additional run-up. I mean, the market in November rose more than all but 4 or 5 months in the history of the stock market. I think it rose 11% in November, from memory. I might be wrong slightly on that number. But so I think the answer is yes. And if you look right now at housing, and you look, for example, at autos, they are very strong right now in a way that you really wouldn't have anticipated looking back to March when the virus erupted, the lockdowns happened, and so forth. And consumer spending and the early data on Christmas sales between e-commerce and traditional brick and mortar retail is fairly encouraging. The economy is not doing nearly as poorly now as you would have thought it would 7 or 8 months ago. And that's because while the shock to the economy was massive in the second quarter, we had the largest decline in GDP ever recorded, the policy response was also massive, monetary and fiscal. The fiscal response at its peak was at a 30% of GDP run rate. And the monetary response between the 4 largest central banks around the world was an increase in their balance sheets of $17 trillion. And the result has been rather a draw, as Jason Furman puts it, in terms of the U.S. economy. The policy response rather held the U.S. economy stable.
Thank you so much to Roger Altman, Evercore chairman and founder. This is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. President-elect Joe Biden is setting up his first confirmation fight with Senate Republicans by choosing Neera Tanden to serve as his White House budget chief. Tanden is a veteran Hillary Clinton aide, seasoned in Washington battles over Obamacare and Donald Trump's presidency. Her selection to lead the Office of Management and Budget drew swift objections from Republican senators who could block her confirmation. Texas Senator John Cornyn called the choice, quote, radioactive. COVID-19 may have been quietly spreading in the United States weeks earlier than previously thought. A new study published today identified more than 100 infections in 9 states between December 13th and January 17th. The samples collected by the American Red Cross were sent to the CDC for testing to detect if there were antibodies against the virus. The first case was diagnosed in the United States on January 19th. The British Prime Minister Boris Johnson is urging Parliament to approve his new pandemic restrictions for England. He said today the emergence of vaccines means, quote, the end is in sight.
We've ordered 100 million doses of the Oxford AstraZeneca vaccine that's now seeking regulatory approval. We've ordered 7 million doses of the Moderna vaccine, which has almost 95% effectiveness in trials. And, Mr. Speaker, we've ordered 40 million doses of the Pfizer-BioNTech vaccine, which, if approved by the regulator, could start being administered before Christmas.
Prime Minister Johnson said the government can't allow the current lockdown to end Wednesday, quote, with no replacement whatever. Tory lawmakers say the Prime Minister's proposed new rules are too harsh and risk damaging the economy. In Western Germany today, 2 people died and at least 15 were injured, some seriously, when a vehicle drove into a pedestrian zone. It happened in the city of Trier, about 120 miles west of Frankfurt. The city's mayor said the casualties had been caused by a, quote, maniac driver who deliberately plowed into the crowd at a high speed. The driver was detained and the vehicle was seized. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thanks so much, Mark. Congress has returned for its lame duck session with an agenda that is packed with important issues, including funding the government and more fiscal stimulus. We welcome now Congressman Ken Buck, Republican of Colorado, where he represents the 4th District in the eastern part of the state. Mr. Congressman, thank you so much for joining us. Let's start with the stimulus question. We've just been hearing from Jay Powell, the chairman of the Federal Reserve, as well as Secretary Mnuchin, talking about possible new stimulus. We now have a proposal, bipartisan, out of the Senate side. I don't know if you had a chance to see that yet or not. It just came out a couple hours ago. Where are you on what we should be doing on stimulus right now?
Well, what we should be doing is you should be helping small businesses and those folks who are unemployed. We're going to lose a lot of small businesses that are going to be permanently shut down, people who have lost their life savings, who opened restaurants and other small businesses. And what we need to do is focus on that. We have $130 billion left over from the last $6 trillion relief package that could be used if it was just appropriated in different parts of the Paycheck Protection Program. That's what we need to do. This bill really is a Christmas tree of gifts for all of Speaker Pelosi's best friends. It has $10 billion for the Postal Service. It has $160 billion for state and local governments. It is aimed in the wrong direction. There's far too much money, over $900 billion.
So I want to make sure we understand what you're talking about. That Christmas tree, as you describe it, is the $908 billion proposal that came out from both Republican and Democrat senators today, right? That's the one you're talking about?
That is absolutely the one I'm talking about, yes.
So let's come back to state and local, because as you said, there's $160 billion, much less than what Speaker Pelosi had originally asked for. Are you basically saying there should be nothing for state and local? Because we did hear from Jay Powell today saying you need to give the states something so they're not laying off so many people.
Well, look, the state and local governments can raise taxes if they need to fund their own governments. All we do with more money is, when we appropriate more money, is we create more national debt, and that's going to have to come due at some point. We've got to be responsible in making sure that some of this burden, the governors are the ones who are deciding to shut down their economies, not the federal government. And to have a blank check from the federal government to fund the decisions made by state governments is a serious mistake.
So you mentioned small businesses being the center of your concern right now. In this proposal, as I look at it, it's about $288 billion, I think, for small businesses. Is that a number that makes sense to you?
It's a number I think maybe too high, because we already have $130 billion left over in the Paycheck Protection Program that needs to be shifted. But it's in the right range, in my view, to help small businesses and those who are unemployed right now. And if we get those businesses back up and they are producing revenue, the states are going to get that revenue. But these governors have got to make decisions about how to shut down a state and how to protect citizens in a state that also takes into account the economic impact. And if the federal government writes a blank check, the state governors do not have to take into account what they're doing, or the financial impact of what they're doing.
Let's go home to your district out there in Colorado and give us a sense of what's going on the ground. First, with respect to small businesses, how bad is it in your district? And second, with respect to COVID, because looking at the dashboard, the state dashboard, it looks like Colorado really has a problem, although it looks not as much in the eastern part of the state, which is where I think you're from.
Well, unfortunately, our governor and his husband have COVID, and I know that's a very serious problem in our state. And I know there are many others that have COVID. We've seen a recent spike in COVID cases and in hospitalizations in the state of Colorado. And for that, I'm very sad. What I see is I see a lot of restaurants that have gone under and will never reopen. And I see a lot of other small retail businesses that have gone under. And those are really the businesses that need the help the most in Colorado.
What about restrictions on businesses, shutting down businesses, having curfews, things like that? Where are you on that? Do you think that can be effective, at least in some places, in curtailing the virus?
I think people have to be responsible, and I think people have to take into account their own physical abilities and vulnerabilities. And I think that when we tell a group of people in rural Colorado that they can't go to a restaurant and eat in a restaurant, and they've only had a few cases of COVID in that rural area, we're really, the one size fits all doesn't work. There may be one plan that's necessary for Denver and a whole different plan that's appropriate for the rural areas. And I think that when the governor shuts down a state completely, doesn't take into account the different medical conditions that individuals have, as well as the different financial constraints that various counties have.
So, Congressman, we look forward to the likelihood, almost certainty now, of a Biden administration. We have the president-elect Joe Biden announcing his senior economic team. As you look at that possibility come January 20, are there areas that you think you could work as a Republican congressman with the new administration?
Yeah, I think there are a number of areas that there will be some common ground with, but I'm very concerned about the president-elect's, if in fact he is the president-elect, Biden, and how he is addressing really what he considers the divisiveness. I think he is creating more divisiveness than calming Americans. When you talk about going back into the Paris Accord and the restarting the Iranian agreement, those are things that are very divisive in this country. And I think this president, if he really wants to heal, and he says he wants to heal, he has to start looking at ways of bringing people together instead of dividing the way the Obama administration did.
Well, I know that Colorado is very concerned with the environment. It's an outdoor state. I have a daughter and 3 grandchildren who live on Colorado, actually. But there must be something that the president-elect can do on the environment that could be bipartisan.
Absolutely. I can tell you, first of all, welcome to Colorado. Please spend a lot of money when you come out to see your grandchildren in Colorado. But if you want to reduce carbon emissions in the United States and around the world, natural gas is the area. And in my district in Colorado, we produce a ton of natural gas, and it is environmentally friendly as any mass-produced form of energy is. And if President Biden wants to act responsibly, make sure that we promote even cleaner ways of producing natural gas.
Okay, Congressman, really appreciate you spending time with us today. That's Congressman Ken Buck. He's Republican of Colorado. We'll bring you the president-elect's announcement of his economic team. That's coming up shortly. And this is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. President-elect Biden has chosen Janet Yellen as his Treasury Secretary, and there appears to be very little doubt that she's going to be confirmed, with no one really questioning her abilities as an economist and as a central banker. But the Treasury job also includes issues with trade relations and sanctions, things international. And for a view on how Treasury Secretary Yellen could change U.S. economic relations with the rest of the world, welcome now Euan Rellie. He is co-founder and senior managing director of BDA Partners. Euan, always great to have you with us. You know this international economic sphere so well. As you look forward to what will be a Yellen Treasury, how could it change our relations, and particularly the sorts of deals you can do?
Well, there are two different worldviews, David, and thanks for having me as always. There are two different worldviews. We've seen, under the Trump administration, obviously, a very combative approach to international relations, and particularly attempts to make bilateral transactions with different countries, which really allow the U.S. to use its economic might in a narrow way to bully other countries. Janet Yellen comes from the opposite worldview, which is one of multilateralism, and really very consistent with the more traditional U.S. worldview post-Second World War, which is that strong institutions, global institutions, bring stability and a better outcome for the world economy, including the U.S.
You've had a lot of dealings in Asia, I know. Asia seems to be really resurgent here, bouncing back from the coronavirus. It appears right now better than a lot of the West has done.
Yes.
What does this mean potentially for U.S. businesses, European businesses doing business in Asia?
Well, the Wall Street Journal has derided Biden's new economic team as effectively a continuation or at least Wall Street Journal editorial have described the team as a continuation of low-growth Obama policies. But actually, I would say the market feels differently, and I think business people doing deals across borders see it very differently. We like the sense of calm. We like the sense of, as I said, of going back to a world where the default is, open trade, free trade, and cooperation between different countries. Of course, there still is a question, particularly around China, because I think we'll see a Biden administration which continues to be pretty cautious toward China. And really, I think Biden has taken the temperature of popular opinion in the U.S., which wants a strong response against any threats coming from China.
There's China, there's a lot of the rest of Asia, as you know so terribly well. As you look over there for opportunities, particularly in a Biden administration, where do you look? Do you look to Southeast Asia? Do you look to India? Do you look to Indonesia? Where do you look?
India is a difficult one because obviously there are conflicting things going on there. Frankly, the Indian economy is looking somewhat weak at the moment, but over the next 5 to 10 years, we think India will take some of the attention away from China. But yes, there are opportunities all over the place. You know, we've had great success at my firm in Vietnam, where some people see Vietnam as an alternative to investing in China. Of course, it's not only Trump, it's not only the Americans from the recent administration who've been scared about China. The whole world, I think, is trying to figure out simultaneously how to take advantage of the very strong momentum in the Chinese economy. China doesn't feel like there's a recession today. It feels like it's growing again really well. But I think people are also scared of a somewhat protectionist and bullying China on the global stage. So it's difficult. I think there are opportunities for Vietnam, Korea, Japan, and absolutely across Southeast Asia. Indonesia is a very interesting country, obviously with its huge population.
Obviously, we want to be careful we don't get ahead of ourselves, but as investors, people like to try to see around the corner, as they say.
Yes.
At the same time, there's anticipation right now that sometime next year, we will have a widely distributed vaccine, which may make the world look a very different place and may really affect economies globally. How does an investor take a look at that prospect and prepare for it?
Well, I think we don't look ahead, but markets do inevitably. And there's a reason that we've seen pretty strong global stock markets and strong recovery in emerging markets, which are people are really looking beyond COVID. And I think, you know, obviously there are vaccinations already taking place in many parts of the world. The Chinese have basically rolled out their somewhat untested vaccines right across, starting to roll them out right across China. And we're seeing some Russian vaccines get into different emerging markets as well. I think we're all assuming as investors that we're nearer the end of the pandemic than the beginning. Of course, the next few months are scaring everybody, but really people are starting to lay down bets for a strong resurgence in 2021. I think there's a lot of cause for optimism in multiple markets. I think we'll see a return to consumer growth and confidence. And we're all looking forward to that.
One of the things I think it's difficult to anticipate is how a Janet Yellen as Treasury Secretary would handle things like sanctions. That hasn't really been in her repertoire to date in her career. It was very much used, obviously, by the Trump administration, for that matter, by the Biden administration as well. What do we anticipate, whether it's China or whether it's, for example, Iran and some of the sanctions that got involved with Europe, where really pressure was put on Europe? What do we anticipate from a Yellen Treasury?
We're going to have a calmer, more multilateral, more cooperative global series of discussions. I think Janet Yellen will be very, very simpatico with the Germans, with the French, with the UK. I think there will be an attempt to find some common ground on Iran. Probably less threat of military action, probably some de-escalation, probably a little pressure put on the Israelis, who've had a free rein, obviously, under the Trump administration. I think we're going to see a much more calm and positive engagement, which I think will favor established companies right across the world.
I want to come back to that reference you made to the Wall Street Journal editorial page and the question of low growth, what the Republicans say was true under Obama. People can dispute that. But is there a concern? Do you have a concern? Do investors have a concern that, in fact, this presidency, a Biden presidency, will not be as committed to growth as clearly Donald Trump was committed to?
Yes, that is a concern. Both Jay Powell and Steve Mnuchin have been, frankly, generous to investment banks, generous to the stock market, giving every opportunity for companies to basically make what's sometimes called the Powell put, that basically you can raise money cheaply in all kinds of different ways over the last 4 years, and you can invest. And for investors, it felt like there's always a floor, but never a ceiling. So it's been very pro-investment, pro-market over the last few years. and everything else like regulation around environment and so on is secondary to making sure that companies can be successful. I think what you're seeing in the Biden team that he's putting together, although it is to a large degree populated with Obama loyalists and even Hillary Clinton and Joe Biden loyalists, what you're actually seeing is a series of advisors who will care more about the man on the street, the working man, redistribution of wealth to some degree, and particularly reducing economic inequality. So there are a lot of labor guys in the team who will be trying to make sure that workers are protected, and to the extent that that comes into conflict with allowing big companies to be successful, the attention will shift a bit more towards protecting workers, and that may, of course, have some implications for, in terms of reining in unfettered capitalism.
And finally, Euan, briefly, you mentioned the Powell put. It's not just you could borrow money cheaply, but also it has really supported the value of publicly traded companies because you have a discount factor of almost zero, essentially.
Yes.
Is there concern in the investment community that at some point that's going to have to come off to some extent?
I mean, look, we know there's going to be a change of pace. You can see what's happened with the stock markets. There was a little pause yesterday, but the Dow is up another % roughly today. I think on balance, investors are very happy that we're going to have a bit less drama and generally fairly centrist policies going forward. So overall, I think there's a lot of calls for optimism, and the markets feel good about where we're going into next year.
Steady as she goes, as they say. Thank you so much, Euan. It's really a treat to have you with us. It's Euan Rellie. He is co-founder and senior managing director at BDA Partners. We are still waiting for President-elect Biden to introduce his economic team. We're going to bring you that live when it happens. Coming up, what President Trump's former top economic advisor, Gary Cohn, has to say about the economy and the lack of stimulus. This is Balance of Power on Bloomberg. President-elect Joe Biden is rolling out his first set of nominations for his economic team any minute now. Bloomberg Technology's Emily Chang spoke earlier with Gary Cohn, former National Economic Council director, about the addition of Janet Yellen to the Biden administration and his observations about the state of the U.S. economy amid the pandemic.
One thing is we have to remember how resilient the United States economy is. If we all think of what we've been through since March of this year and where we are now in December, I think it's nothing short of extraordinary to how resilient we've been, how well the consumer has held up, and how well the economy has held up. I'm not in any way, shape, or form saying we're out of the woods, because we're not out of the woods. And I desperately believe that we need more stimulus, and we need more stimulus today. I would beg Congress to go back to work and pass a stimulus bill this week. There's no time like the present. Dollars put back in consumers' pockets would be very, very important. And we've got a lot of stimulus dollars or support dollars that are going to end over the course of the month here of December. Unemployment benefits are going to run out, and other benefits that people desperately need are going to run out. So look, I think we're doing as well as we can given the situation, but there's enormous opportunity to do better. And I think Congress should get back to work and should pass a large stimulus package.
But do you think that stimulus will actually happen in a lame duck session or under the next administration in a divided government?
Well, I'm praying and hoping that it would happen in a lame duck session. There's no reason it shouldn't. If it's going to happen, eventually it might as well happen now. And we all know that the present value of those dollars is extraordinarily high today.
That was Gary Cohn, former National Economic Council director. Catch more of that interview on Studio 1.0. Coming up, Balance of Power continues on Bloomberg Radio. We are waiting for President-elect Biden to introduce his economic team. Plus, we'll talk to vaccine historian Michael Kinch. And this is Bloomberg.